If you're new to trading, this video will save you months of wasted time. My name's Richard Jackson, Lepus Prop, and I'm going to go through some of the basics for beginners all the way through to some advanced ideas. The first thing that you should focus on is not necessarily about throwing all your money into an account and trying to punt and trade it. Is to learn how to do it properly, get to the basics first, and then you move on from there. This is the first thing that I get all of the traders to do, is to get that right setup. Go out there, go buy yourself a large monitor if you don't have it, and have at least 2 screens so that you can do proper analysis. The next thing, and what's very important, don't think that you're going to become a great trader trying to trade off your iPhone or your phone or an iPad. Just forget about it. You need to have the correct office setup to become a great trader. So when you get that right setup, then this is going to make it much easier to become a really good trader. So topic 2, quickly talk about risk and reward and a couple of the metrics that are very important as traders. The good thing about trading is that we don't really need to go past year 9 math, okay? Understanding probability, understanding some simple calculations, that's about it. We're not sitting there bashing our computers with quants and all those sorts of things. The first thing that we really want to be aware of is how does risk to reward actually work, okay? So risk to reward simply means if I've got my stop loss, which is protection, profit target, which is where I'm going to win, the difference between the two is my risk versus reward. I've got, in this example here, there's an entry, let's say in there, we've got, let's say 1 point loss and we've got 1.5 points win, then our risk to reward equals 1 is to 1.5. So, and this is very important that we always establish what we're doing as far as our risk to reward goes. Most traders will aim for a 2 to 3 risk versus reward so that we can have a win-loss ratio that's a little bit less than 50-50 and we're still winning. Let's talk about the relationship now between win-loss ratio and risk versus reward. In trading, we've got risk versus reward on a single trade, which is fine. But if we take all of our winners and all of our losses, so the average wins divided by our average losses, that's what's called system R multiple or system risk to reward. And what we can do is we can find the relationship between win-loss ratio and system R to find the break-even point. Let's have a look at this graph. Over here on the y-axis here is your win rate. Okay, and then we've got on the bottom our system R multiple. Let's say if we've got a 50-50, so let me just draw it in here now. There's a 50% win rate. I need to have around about the 1:1, which makes sense, to break even, okay? So this red line down through here is our break even line. Now what we want to do is we want to make sure there's no point in being break even all the time. Great. Good to know. But what we want to do is over time, collect our data so that we sit somewhere out here. So that if we do have a 50-50 win-loss ratio, we need around about 2 to 3 system R multiple. And that's what traders kind of look for. But to start understanding how the probability works, because we know we're not going to win all of the time, to understand that graph there is going to help you a lot with your behavior and psychology. The next section that we're going to talk about is what software do you need? Not only do your analysis, but also software for execution on the market. So we use TradingView for our analysis. TradingView is very good software for what we require it for. It's got all of the tools in it. It's all web-based, so it's very easy to use as well. We use Pro Plus or above. The higher subscriptions give us the ability to use more tools within it, and it helps us analyze price correctly. Just a disclaimer as well that I'm not affiliated with any of this type of thing. I'm not interested in having any affiliation on selling this stuff. This is what I like to use. It works for me. Anybody coming on board will need to use it because that's what everybody else uses as well. All right, so the next piece of software that we use is for execution. Some traders use MT4, MT5 or C-Trader. I use MT4, very simple to use. It is a desktop app. There is a phone app for it as well, but I don't want any of my traders trading off their phone, but it is very simple as far as execution goes. Buy, sell, place your stop, place your target, simple. Third thing is understanding your news. It doesn't have to be in depth, but you do have to broadly know what's going on. 3 websites that I really like. First one, Trading Economics. This is our our calendar of all the events that are coming up. Second one is Reuters Business, okay? This will give me the headlines of all of the information as far as economics go. The third one is Market Scanner. This gives me a synopsis of what's happening on Bloomberg and Reuters. The next topic that we're going to talk about is actually how to place a trade. Three types of orders that exist. One is a market order, the other is a limit order, and the third one is a stop order. We don't really use stop orders, but we do use the top two, and I'm going to show you those. First one here is how to place a market order. You can buy or sell by using, in MT4, we can go over to Tools, Options, and then we go into here and click on one-click trading in there. Then we can go over right-click and one-click trading or Alt-T. That will bring on and off the buy-sell buttons. But until that happens, I'm actually not in the position. I'm not live in the market until that gets what's called filled at that price exactly. What we can do is if I want to place the profit and target with this limit order sitting in here, I can go over to a couple of custom indicators, which I've got here, and I can drag and drop. There's my stop, and drag and drop the take profit. There's my take profit for that limit order. The example that I've just shown you there of the execution of those orders is on what's called a demo account, which is just fake money. It's not real money. So this is where all of our traders start. We all start on demonstration account so that we can practice our skills, get them all right. If anything goes wrong, it's not going to hurt us financially, and we're not jumping the gun. So demo first for everybody, then we transition you into live money. Where do you get a demo account from? Well, there's plenty of them out there. They're all over the place. Pepperstone, Fusion, CMC. Make sure you pick AFSL or licensed broker, and they will be able to show you how to open up the demo account so that you can start practicing. When's the best time to trade? Usually the Asian session during the daytime in Australia is not really the best because the volatility isn't there. What we do is we trade during the Euro session and the US session because that gives us time to be at work during the day, come home, get everything done, and then we can sit down at the computer and focus on what we're doing. Euro session works really well for us. I personally just trade the Euro session for about 1 to 2 hours a day because I've got family, I've got things to do during the day. You might be pretty surprised that I can do all my trading within 1 to 2 hours. But once you've got the skill set, I treat the markets like an ATM. Go in, collect my cash, and leave. The next step is expectations of how long it's going to take you to learn how to be a trader. It's up to you, really. You can just do a little bit every day, or you can go through it and really get knuckled down and learn. But like anything, you've got to learn how to do it first. But once you get onto the other side and understand how the framework of the market works, learn everything that you need to learn, then you don't really have to spend too much time on it. A lot of guys will still hold their job, and one thing I do say is never quit your job while you're learning how to do this. But as a progression goes, it takes as long as you want it to take. Usually 3 months to get a framework, 6 months to get used to it, 1 year to become good. Okay, finally, once you become good at trading, the good thing about it is that you become an asset, not only just for yourself, but also for companies like mine. Lepus Proprietary Trading. We look for really good traders to be able to fund. I've got a trader right now, which I'm just about to fund $1 million to so that they can trade under our wing with us. And he will be able to get to a position where he can quit his job and he can focus on what he loves the most, which is trading. So what that means is the more traders that we have, especially on a risk level, is that we could spread out our risk across a number of traders so that we don't have specific risk on one. Okay. And that's very important as risk management goes. So to simplify it, we bring on new traders to help grow our accounts and grow our business. We continue to give them support so that they keep growing and they keep making money for themselves as well. So it is a win-win situation in which we make money, they make money, and we're all happy in the end. Hopefully this video has helped you to understand what we're doing and how to get started as a trader. We're going to do more videos like this into the future. So subscribe down below and I'll see you for the next one.